p.m. only on Bloomberg Quint.
You're watching Countdown right here on Bloomberg Quint. A day of soft trade on the indices, unlike yesterday where we did manage to recover and close flat for the day. This time around it looks a little bit tough for the bulls to cover ground. We're down 1.5% on the key indices. We'll talk about all the internal moving parts in just a few moments, but run you through the headlines. No Friday cheer for Indian equities as both the benchmark indices trade with cuts of over 1% each. Nifty slips below the 10,850 mark while Sensex drops over 400 points. The government seeks to reopen the audit accounts of IIFL and two of its subsidiaries, citing ICAI's findings, which held its statutory auditors responsible for mismanagement. Tech players weakened today despite Accenture revising its lower end of the growth target. And aviation passenger traffic growth hits a 4-year low in November as higher fares discourage flyers. All right, so that's what it is all about. And today's session looks like the week is going to come to a softer close. Yeah, it certainly seems to be the case, Devina. And just looking at what's happening in the index right now, you're trading at the lowest point of the day, not a surprise. The market has stayed adverse for most part of the trading day today, but I think it's only expanded in favor of the declines as the last half an hour or 45 minutes have shaped up. So you can see we were weak. I think it's just stayed weak. So about almost 5:3 in favor, or 5:2 in favor of the decliners currently. The volumes in today's session, and let's pull them up once before we get to what's happening on the individual pockets. Look at the volumes. It's not essential, close to the expiry week, yes, but it's not the Nifty weekly options expiry. Maybe 6.5 lakh odd crores on the F&O side. The cash market volumes are a bit tepid, but the F&O side of the trading volumes reasonably high in trade. Bring up the heat map and just show you what's happening there. On the index and specific pockets. Just the range. I really don't want to talk about too many stocks, but just look at what's happening. There's a fair degree of red on the screen, and a lot of heavyweights have corrected quite strongly. The Marutis, Reliances of the world, Infosys down about 2.5% too. So fair degree of pullback that we're seeing in the markets. And just one last point, Devina, that I want to mention before we talk about the mid caps and the small caps. If we can bring up the OI distribution, and the importance out there is because we are looking to go below the 10,800 mark currently. We're actually at 10,792. We are sub 10,800 levels. And if you look at the open interest distribution on the put side, the red bars are the put side, the highest, I mean 10,500 is fair distance away, but fairly high concentration around the 10,800. If this being taken out, if it stays lower and convincingly lower, then some bit of unwinding could come in, which could add to further pressure in the markets as well. But is the pain getting reflected in the liquid universe, in the broader markets as well? Well, of course, Neeraj, and like you highlighted in the advanced decline ratio, the breadth of the market itself is extremely negative, and that is showing up in the mid caps and small caps. Just to run you through what the key indices are doing at this current point in time, the mid cap index as well as the small cap index, most of them have lost out significantly, more than what the benchmark indices have done. A few stocks that have managed to hold up and trade in Ujjivan Financial Services, the stock was up actually in double digits in yesterday's session. Today's session too sees a carry forward of that trade, so 2.7% higher. IRB Infra also trades with gains of about 2% odd. So a handful of stocks managing green shoots in today's session. Symphony is the other one that is looking weak in trade today. So down about 3.5% right now. You've got Sterlite Tech, which is down 3.5%. Avanti fees from the broader universe is also under pressure in today's session. Some stocks with the back of volumes and what we're seeing. Adani Enterprises loses about 2% odd, but the volumes are 153% higher than the last 20 days average. Emphasis, the buyback period is closed. You've got the stock now down about 1.6%. Tried to claw its way back above 1,000 just a few days ago, but could not hold on, back down to 968. And Graphite India at 802 odd, down about 3% odd on the back of heavy volumes as well, closer to about 4 lakh shares being traded on that counter. But futures and options and what's happening there in the derivative space, we've got Agam Bakil who's joining in right now to run us through. The rollovers obviously will start picking up next week onwards, but what exactly is it looking like on the open interest side, Agam?
Well, there's no doubt about the fact that the selling pressure is clearly there in the derivative space. Of course, we are looking at a truncated expiry week as we move in through Monday, but there isn't too much traction on the Nifty futures, and this has been typical of the last 2 weeks for that matter. When it comes to trade, there's been very little traction in open interest for the Nifty futures. The Bank Nifty futures, on the other hand, are seeing more accumulation. But today, for an exception, it is towards the downside. And moving on to the volatility index, as I was highlighting earlier in the morning, as long as the VIX remains below the mark of 16, well, traders won't be too worried, but the moment it goes above that, well, there will be some amount of panic coming through. For now, it's at 15.6, and as one can imagine, there will be more writing around the 10,900 and 11,000 calls, and that's exactly what this chart in front of you depicts. When it comes to your open interest distribution in general, well, no surprises for guessing that the 11,000 call is the one which stands up. So that is tough resistance now, and it strengthens day by day. On the lower end, you have the 10,500 put, but we're going to have to wait and watch out for that one. Coal India does see a lot of longs building in. I know that is currently down, well, about 0.5%. So Coal India is something that I'm keeping an eye on right now.
All right, Agam, thanks very much for that. Moving on, stock in focus is Nalco, and aluminium hits a 16-month low after US hinted at lifting sanctions on Russia's Rusal. Not only globally, Indian aluminium players too came under pressure post this. To discuss the impact of this particular move in further detail, joining us on the phone line right now is Mr. T.K. Chand. He is the Chairman and Managing Director at Nalco. Mr. Chand, thanks very much for taking out the time. Does that cause a little bit of a worry? Because, once these sanctions get lifted, is there a possibility of the prices of aluminium coming off substantially due to the possibility of a flood of supply?
Yeah, right now, aluminium prices are at 16-month low level, and that is the critical cost line at which it is moving. So therefore, any further downward movement we do not expect. And as far as the sanction is concerned, it is already in the news that sanctions are getting lifted, and after USA has proposed the sanctions, prices moved up, and 2 to 3 times they have deferred the sanction. The market has got adjusted, and this news 2 or 3 days, this news is going around that they are going to lift the sanction, and market has already reacted by a moderation of around $20 to $30. And beyond that, I don't think there will be any further impact of lifting of the sanction as far as downward pressure on existing level of the price of aluminium is concerned. But yes, there will not be any upward pull. If sanction would have been there, then there would have been probably some dislocation in the supply, because Rusal is a major stakeholder as far as aluminium and aluminium market is concerned. They control around 6 to 6.2% of total production. So if the sanction would have been there, probably some kind of dislocation and market sentiment would have been there to boost the existing level of prices. So therefore, in short, I can say that there will be no further downward pressure as far as aluminium price level is concerned. But yes, there will be no upward pull once the sanctions are lifted.
What is the impact for you at Nalco, sir? And if you could highlight for us, are the prices getting affected for you in terms of your exports? And what was the last consignment prices at for you?
Last consignment we have booked it at $404. Yes, aluminium prices have come down because in the first quarter it was around 555, and in the second quarter it came down to 524 average, and in the third quarter it is averaging 475. And the current price at which we have booked the shipment is $404. We expect that the aluminium prices, which has moderated, it may start firming up from the new year onwards, because you know that for the last 2 to 3 months there has not been much of buying of alumina in the market by the smelters because they were having the inventory. And there was also uncertainty in the market. Once now there is some kind of stability has come and the smelters stocks have been already depleted, there will be a lot of buying spree in January and more particularly after Chinese New Year. So we hope that with that and the prices of critical raw material like caustic soda is in a farm level, the aluminum prices are likely to move and get firm from January onwards. And
how much could the prices be impacted, sir? Just to give us a rough idea.
We expect that the range of the price at which it will be moving around $430, $435 to around $480. In that range, the coming firming of the prices will be moving. And yes, that is also a very good price, and it will be quite remunerative for a producer, alumina producer like Nalco. And Nalco's EBITDA margin in the first half it was around 33%. Now we are expecting that this EBITDA margin will come down, but overall in the financial year of 18-19,
how much will you expect the EBITDA margin to come down?
Now EBITDA margin we are expecting that it will be moving for this second H2 around 23 to 24%. That is how 7 to 8% it will come down. But overall, if you see H1 and H2, our total EBITDA margin for the financial year will be somewhere around 26 to 27%, which is higher than the last year's EBITDA margin of 18%.
Okay. Would you see a change in the volumes as well? I mean, if you could probably, paint a picture for us in terms of how much was the difference when the sanctions on Rusal were in place versus what they would be once the sanctions are lifted and that much moves out of the kitty?
Yeah, but as far as production is concerned, we are now, we have planned to produce little more because we wanted to take the volume advantage. Because since the prices are a little moderated, we thought that volume effect will increase our turnover as well as the profitability. And therefore, we will be doing maybe around 30 to 40,000 more as aluminum, calcined alumina, and as regards aluminum production, maybe around 25 to 30,000 ton more will be doing.
All right. All right, Mr. Chand, thanks a lot for joining in. Appreciate you taking out the time.
Thank you.
Mr. T.K. Chand there saying that there could be some downward pressure on the EBITDA margins, but the EBITDA margins for the year will still stand higher than the previous year at about 26-27%. Maybe in the coming quarter at 23%. Could see a dip of about 7 to 8% on the EBITDA margins.
7 to 8%. That's interesting. Okay, let's wait and watch. For now, Nalco in the green. Some of the aluminum companies, of course, have already taken a fair bit of stick in the last few days. I think the market remains the bigger worry though. We're now down about 10,785, trading at the lowest point of the day. The Nifty Bank to 26,949. That support of 10,800 holding for now. 15 points is not really breaking down of the support. But let's wait and watch if this further gets pressurized. Just want to pull up what Europe and the Dow futures are doing right now before we move on to the next story. And let's just see what the support from the global markets would be. Whether they're as worrisome as they were yesterday, the Dow futures in particular, or is it quiet? Europe is a reasonably resilient piece right now. And the Dow futures, just about 0.25%. So maybe the world markets not looking as worrisome as they were looking yesterday. But what is looking worrisome is the air passenger growth, which has slowed down for the second straight month in the month of November. Higher airfares may have spoiled the party for some of the airlines which were hoping to capitalize on the Diwali holidays. Sumit Sarkar is here with the details. Sumit, we were speaking about the possibility of this happening when the previous data came about. But what is there a trend that the last 2 months, and particularly the month of November, is suggesting?
Well, it was not at all a good month for the aviation sector. If you see in the November month, and as you just said, we had pointed this out a week back because the ATF consumption was the slowest in the month of November. Now, if you see, despite a lower base and a holiday month, the passenger growth was only 11% in the month of November, which was the slowest at least in the last 4 years for the aviation industry. Now, this year, Diwali was in November as against October last year, and usually passenger growth is seen to be higher during the festive season. Now, these signs of slower passenger growth during the holiday period would be a concern for the aviation industry, as they have not only placed large aircraft orders, but were also expecting some benefits to come in from the falling oil prices. But due to this declining passenger growth. Now this would also be arrested for them. Now if you see this slowdown in passenger growth could be because of the hike in fares seen in the month of November. Now multiple reports had cited earlier that that the airfares have increased in the month of November, and an analyst to whom we spoke to said that the airfares were higher by nearly 1,500 to 2,000 rupees compared to the second quarter. So that's the reason why the passenger growth had slowed down in the month of November. Now if we see company-wise, other than Indigo and Air Asia, the passenger growth for all the other airline companies were below the industry growth. Now for Indigo, the passenger growth was close to 21% compared to last year, but this growth of 21% was the slowest in the last 6 months. For Air India, the passenger growth declined by 0.4%, and this is the first time that it has declined in the last 18 months for Air India. Jet Airways passenger growth declined by 7%, which is the highest in at least the last 4 years, while that of SpiceJet and GoAir, their passenger growth was close to 10% and 9% compared to last year. Now along with this, the passenger load factor, that is the capacity utilization, and that also remained weak for all the airline companies compared to last year due to higher capacity addition and lower passenger growth. Now it declined the most for Vistara and Indigo compared to last year. Lastly, on the market share front, now Indigo and Air Asia continued to see an increase in their market share at the cost of other airline companies. Indigo's market share stood at around 43% in the month of November, while that of Jet Group stood at close to 14.3%, which was the lowest in at least the last 4 years.
Okay. Samit, thanks a lot for that. That's the trend in the aviation space. Indigo, SpiceJet and Jet Airways continue to remain in focus. Nifty, as Neeraj highlighted, no respite thereabouts, so 1.5% plus right now on the index. We're at the lowest point of the day, treading dangerous waters right now. Nifty Bank down 340 points. Moving on, steel prices have cooled off since hitting a high in June this year. China has shown some laxity to its steel producers this winter season, triggering concerns of another sharp correction in both hot rolled coils as well as rebar prices. But what's cushioning the fall in the correction in raw material prices, helping steel makers hold on to their margins? And come April, things could get better. Nikki Mirchandani tells us what all are the other factors that we need to keep in mind now. Nikki.
Thanks, Naveen. I'm going to start off with the HRC prices, which currently are trading at a one-year low level that we're looking at. And this is move as much in tandem with what we're looking at the international prices. The prices are currently at 44,044 per ton, which is after the moderation that we've seen back in November from the highs that we've seen back in October. But this is, if you can map back the international prices, you would see the moderation coming in on the China export prices right since October. The main reason behind the decline, if you could pull up the chart that we have for export prices, the main reasons that we have behind the decline coming in on the Chinese export prices, that's because of the laxity that the Chinese authority have shown towards the production of China, towards Chinese steel, which in turn has led to higher output, weighed in and exerted some kind of pressure coming in on the prices amid the trade war tensions. What would that mean? Could that arrest the fall? Well, let's just look at the factors. They're kind of comforting right now because the domestic spreads or the margins, that's the difference between the selling price and the raw material price, they seem to be healthy at this given point of time, which make the steel makers in a better position to not slash the rates as of now. If you look at the levels that we're looking at, December 2018, 24,251 per ton. That's the spread, which is not far away from the level that we've seen from May, which is at 27,145. Almost an 8-year high level the spreads are currently looking at. And if you look at the Chinese exports in terms of volume, they've been ebbing, and that's a good sign for the Chinese steel out here, for the Indian domestic market. And also if you look at the last factor that we have which could arrest the fall, which is the inventory which is drying up. Currently that's at low of March 2010. So that also augurs well overall for the Indian domestic market.
In fact, there were talks earlier on about how most of the inventory that's been there has been on the higher side, so people are not rebooking with the metal producers, the steel producers, so which might actually change now onwards. But what are the analysts factoring in terms of these prices?
They're actually looking at some temporary concerns coming in for the industry, but then overall they've painted quite a bullish picture for the steel industry as a whole. They remain quite bullish. What Edelweiss particularly has to say that they say that the rising raw material prices back in China could stem the export price of fall, which in turn augurs well for the domestic steel prices as well. And ICRA in its note says that the prices are expected to fall until Q4 FY19, but then the prices would regain ground as construction activity picks up with the new calendar year, that they're expecting it to be in the range of around FY 2019. Also, we have few other brokerages which maintain high-tone securities, which has a bullish rating, says that the scale down in trade war is expected to benefit the overall steel consumption cycle. However, Macquarie Wealth Management has a different perspective. In its survey held, it said that the sentiment in China still remains weak and the utilization rate have been falling on account of higher steel inventories.
Thanks a lot for that, Nikki. So, well, that's the update on what's happening in metals. Not just, I mean, this is not really today's update, but what's all that's happened the last few days. Now, IT has been in the eye of a storm, so to say. Antique has come out with a note where it expects companies like Infosys and Wipro to carry out share buybacks and return cash on their books to the shareholders. Agam Vakil has read that note in detail and is here with more on what Antique has to say. Agam, good afternoon.
Good afternoon, Neeraj. Well, this is largely on expected lines, not just from Antique, but from the street in general, because both these companies have earmarked certain funds for these buybacks. So I'm going to start off with Infosys and Antique's expectation of the buyback on Infosys. So the buyback, according to Antique, is expected to be coming through around the first week of January, perhaps the last week of last couple of days of December. And it's assuming that the buyback is going to be at around 11,500 crores at around 8,800, or rather, pardon me, 800 rupees per share. Now, the buyback will be additional to the company's dividend payout policy, considering it has a policy of around 70% of the free cash flows for the company. Current capital allocation implies a 3% dividend yield and a 7% yield, including special dividends and buyback in FY19. Wipro, along with Infosys, is also expected to announce a buyback, but this is after it gets an approval from the NCLT that it could go ahead and merge some of its subsidiaries. So we're keeping an eye on both these companies with respect to buybacks in the next couple of weeks.
Thanks a lot for that, Agam. We'll do watch out for these names as well. Let's see if that development indeed happens or no. Shifting gears, literally and figuratively, new entrants to the premium motorcycle race can't throw Royal Enfield off its game. The company's managing director, Siddharth Lal, is ready to take on competition and is confident of remaining the dominant player in India. The bike maker has a home away from home strategy to build presence internationally. Hear him out.
We really believe and have a very long horizon on international market. It's not important for us to sell a lot of motorcycles today in international markets. What's very important for us is to set the stage for us to become really big in a few markets so that we can call 2-3 other markets as home markets in the next 10-15 years. Okay. That's the game, not to sell more today. Yeah, well, so and on the back of that we can get into even more markets, but it's really to be able to do that, and the way we're going around about it is we've seeded a few markets around Southeast Asia and Latin America, in addition to being present in North America, Europe, Japan, Australia, which are more heritage markets. They like Royal Enfield, but they're not the biggest markets in the world anymore, right, for motorcycles. So India-like markets, which are commuter upgrade markets, are Southeast Asia, Latin America. We had stores. We had really nice Royal Enfield stores in Bangkok, in Jakarta, in Sao Paulo, in a few cities in Colombia, and what we did was we gauged the reaction of customers and we understood what people want. So, for example, initially we thought Indonesia would be the perfect market for us because the second is, after India, it's the biggest market in motorcycles. Yeah. But what we've discovered is that traction in Thailand, because of the stores we have there, is much more, and the market is, let's say, a bit easier to enter from different perspectives. So we're going now. We're putting more energy behind Thailand, just as one example. Okay. And likewise, we've understood, only when you get into a market, you understand how tricky the damn thing is, right? In Brazil, we've understood, okay, it's one of the most difficult motorcycle markets in the world.
Dominated by Japanese.
Yeah, it's dominated by Japanese. They control everything there. Everything, the distribution, the banks, the transportation channels, the suppliers, they control everything. So how do you make a breakthrough in a market like that? So, this is the learning curve. We're investing in people, we're investing in time, we're investing in lots of things to learn. And once we learn, we can make bigger and bolder bets, and that's how we're going about it. It sounds a bit slow, but it's actually, for us, we think that's the right way to go in the long term. Yeah.
Okay. And Siddharth, one quick question on the competitiveness of the marketplace. Java is coming up, and Bajaj is launching new products. So there are a whole host of new products which are hitting the market. And when I talk to analysts, they are always talking about Java coming in or new products coming in, competing to you. Of course, your volumes are quite stable in the marketplace despite the competitiveness coming in. So how are you really gearing up for that particular competition which is there, especially targeting the Royal Enfield?
Yeah, so there's a lot of new motorcycles now in the mid-size space which have come in over the last many years, and really it's a testament to our success. They've seen us do exceptionally well, grow from 50,000 10 years ago to 900,000 or something like that. So people are like, bloody hell, we need to follow these guys and do that. So everyone, there's a lot of Me Too brands. There's a lot of brands trying to do different things as well.
Yeah.
So, and a lot of brands try to target us, and in one sense that's good because it increases the excitement in our segment, and we're the market leader, so we're going to do, if we grow the segment, that comes in our favor if actually the segment grows. On the other hand, we're not sitting still. As you can see, we're making some bloody awesome motorcycles. Yeah. The Interceptor is the first of a totally different way of making motorcycles for Royal Enfield, and it's sublime. It's smooth, it's gorgeous, it does the job like, I think very few other motorcycles in the world can, and I'm biased, but I truly believe so. So we're not sitting on our, we're not sitting down and just sort of waiting for others. We are working extremely hard. We've got, if this is the thing, the taste of things to come, we got a lot more interesting motorcycles, and our existing motorcycles also sort of really rising up and doing very interesting things. So there's a lot of evolution, there's a lot of revolutionary motorcycles which are going to come out of Royal Enfield, and it's our distribution, it's our ecosystem, it's the brand, it's all the stuff we're doing. So sure, there'll be other people, and I don't think we can hold on to a 90+ market share in 250cc plus. That's not our objective, but our objective is to grow the market and to be the largest and most dominant player, and that's still very much our objective in India.
All right, talking about Royal Enfield there, Siddharth Lal. Let's talk about the markets and the worsening of the situation right now. So we're now down a good 183 points, and we're slipping as we speak. So 10,767 right now on the Nifty 50. Banks looking weaker. We've given up 400 points in the Bank Nifty at this current juncture. Should pull up all the Nifty movers right now to see where the pain has exaggerated. Remember, we've been talking about how IT as a pocket has been looking weak through these last few trading sessions. Infosys, Wipro, TCS, that's the Nifty IT bucket for you, 1.6% lower, in line with what the benchmark index is doing. Gainers, they're up on your screen. So on the back of what the crude oil is doing, Brent crude now at about 55. You are seeing specific gainers, but the quantum of gains can't compare to the quantum of losses that most of them are witnessing. Tata Motors is a surprise mover. Indian Oil on the back of the buyback there, that's down about 5.5%. UPL's down 4%. Indiabulls Housing, some profit taking off because Indiabulls Housing nonetheless has been quite the mover in the last 7 days when the market rally was continuing. We've got a few other stocks to talk about, and the mid-cap space should pull up movers from the mid-cap space as well. While the index itself is down more than 1.5%, almost 2% now, the broader market space, the advanced decline ratio, clearly pointing towards the kind of pain that's there in the market right now. But getting in our technical experts now, Shubham Agarwal of Quantisap is joining us right now on the show to make sense of what's happening and whether or not it's a tradable opportunity. Shubham, thanks very much for taking out the time. While up until now, the last few days, most of the calls have been on the positive side, looking at entering on dips. Is this the dip that you were waiting for probably, and is this the time to enter?
Hi, good afternoon. If you look at the market placement right now, the intensity of the fall has been pretty abnormal. And if you look at the options data on Nifty, 10,800 was a significant support for quite some time, but we saw that even that has got breached now. But the nearest congestion that we see on the put open interest still stands at 10,800. So I think the overall trend for the market is now coming to a question, and even though it is trading at a support, I think this is a kind of a trend reversal that we are seeing on Nifty. But because it's already about 200 points down, I don't think it's a good opportunity to go and take a short trade at this point of time. So I think for now we should avoid the index, but if at all we do see a pullback to the level of 10,880 or 10,900, if at all that happens in a day or two, I think that should be taken as an opportunity to exit the longs, and in fact some more shorts can be built there. So the overall market placement and the data are suggesting that it's a kind of a reversal. So I think for now the index is a void and it is a sell on pullback.
Now, what if you had an existing long position which is still standing? Would you take it off?
Yes, after such a big correction on a single day, I think there's no point staying on a hope of any kind of a recovery in any of the stocks that are there. And if you look at the movement that has happened in the past 2-3 days, the major participant in the market were the second or the third category stocks, which generally don't see any kind of a rally, and it was more of a short covering led rally rather than fresh longs getting built. So I think if people are stuck with some of the stocks which are not doing well, I think it is the right time to actually take exit from them and not to wait till the stop is hit, or not to wait till the losses increase. So I think this is an indication that the market is suggesting that get out from all of the trades that are there on the long side. Don't go short at this point of time. I think on a pullback there will be an opportunity to go short.
Hadrien Mendonca of IIFL also with us. Hadrien, good afternoon. It's not a good afternoon if you are a bull, but the last couple of times you've bought the dip. Are you refraining from buying the dip this time?
I'm not completely refraining, but we are nearly almost 700 points rally, and we have started correcting from there on. The pace at which the correction has started, the downfall has started today. In fact, we were expecting some kind of profit booking, but look what shape the profit booking is taking. The selling pressure is just intensifying. In fact, I went through a lot of indexes, doing an index, analysis. In fact, we have found that the private bank index, the mid-cap 100 index, the Nifty 100, 200 and the 500 index, including the auto and the infra index, all these indices have actually formed a bearish engulfing pattern on the daily charts, which is actually indicating, and it's a broad-based sell-off that we are witnessing. There is still more pressure likely to get extended going forward. So, the important question here is that if you are holding long position, what are you supposed to do? Use a rally to actually trim your positions. If you are long, wait for some more dip where you can once again reconsider buying the Nifty on the downside. But right now we have weekend. I think the Christmas season is on, and the volatility would be slightly lower. Because of volumes are also going to be a little lesser. I think it is better to stay sideways or stay out of the market for a while, wait for a healthy dip, and then we can consider re-entering at lower levels.
All right, gentlemen, just stay on with us. Tracking some news regarding Ranbaxy then. The Singapore High Court has rejected Malvinder and Shivinder Singh's plea seeking a stay on the $526 million award granted to Daiichi Sankyo. Ari Alstetter of Bloomberg News is joining us right now on the show to run us through more details of the same. So what are we picking up, Ari?
Well, one more legal option has been closed off for the Singhs, is basically it. They were trying to appeal the ruling of the Singapore tribunal that ordered them to pay $526 million to Daiichi. That appeal is now lost. So their option, they can go to the Supreme Court of Singapore because this ruling came from the High Court. things are narrowing for them. This, of course, comes right after Daiichi won another legal battle, this time in India, getting a halt to the sale of Fortis to IHH, which was about to be completed with an open offer. The argument there was that the Singhs had put up their shares in Fortis as a surety to pay the award, and so IHH couldn't possibly buy those shares because they should have been with the court.
But that was clear later on that it's not the original 31% stake sale, it's the additional open offer of 26%.
That's right. IHH actually already has its 31% stake in Fortis. Did that through a preferential share allotment. It sunk 4,000 crores already in the company. This was for the open offer to the other shareholders. It's sort of interesting because, I mean, the Singhs don't really have those shares anymore. They took loans, put the shares up as collateral, defaulted on the loans, so the lenders have the shares now, and now the lenders can't benefit from IHH's deal because of all the troubles the Singhs are still in.
All right, so another blow for the Singh brothers. So you're saying the only other option is to go to a higher court now for them?
Yeah, there's one last option for them, which is the Supreme Court in Singapore. So they could decide to appeal this ruling to that court, but from then on, it's pretty much the end of the line. The Indian courts have already said the Singapore ruling is enforceable here, so their assets in India are up for grabs if they cannot get this appealed to the Supreme Court.
Ari, thanks so much for joining us today and giving us that perspective. That's Bloomberg News. And Ari speaking about one more blow to the Singh brothers in the Ranbaxy case. One more blow to the markets. We are nearing a 200-point fall now. It's looking fairly ominous. It may have not looked so and somewhere around noon, but right now it's looking fairly ominous. Let's get in some stock recommendations going as well while we are at it. Shubham, let's start off with you. Your stock ideas for this afternoon.
Yeah, I have two stock ideas. One on the buy side, but more from a positional to investment perspective, and the other one is more on the trading side, on the short side. So the first one is a buy on Siemens. If you look at the overall placement of Siemens, and I think I have discussed this last week as well, after a 2.5-3 month consolidation where the volume pattern was significant and we have seen the derivative data being pretty abnormal, and fresh longs have been built there. I think, you know, this breakout that has already happened in Siemens seems to be very, very lucrative. And after the correction in the market, we have seen that a temporary pullback has also happened there. So I think if one is looking to go long at this point of time for bottom fishing, Siemens is one of the stock to add in the portfolio. So I recommend to buy Siemens with more of a positional perspective for a target of 1080, and the stop loss will be 945. The second stock is a trading bet on Ashok Leyland. If we look at Ashok Leyland, it has been a pretty underperformer, even though we saw that, you know, the overall auto space moved up, but we didn't see much of performance coming in from Ashok Leyland. And the recent pullback was more a short covering led rally, and today we have seen that fresh shorts have also started building up there. So I think it's a good opportunity to go and take a short trade. So the recommendation is to go short for a target of 98, and a stop loss can be placed at 108.
Okay, got that. Hadrien, what about you?
Yeah, so both my recommendations are on a sell side. First one is sell on a Bharat Forge December futures. Actually, if you see, Bharat Forge has been a huge underperformer. Even when Nifty and Bank Nifty, both the benchmark indices were rallying, Bharat Forge just about managed to rally pretty with a small percentage points, which is indicating that once again we have seen a rising channel pattern breakdown, and it is resuming the downtrend that Bharat Forge is into. So I think one should not miss out on this opportunity. One can again sell Bharat Forge December futures for a target of 500 levels and keeping a stop loss at 519. Second short position is on an SRF December futures. We are seeing a dark cloud cover, a candlestick pattern formation on the daily charts after a very, very good strong momentum that SRF was into. These are early signs that we could see a little bit of cooling off even after today's downfall. So one can short sell SRF December futures for a target of 2120, keeping a stop loss at 2210.
Okay. Anand Tandon with us as well to talk about his thoughts on the markets. Anand, good having you. Thanks much for joining in. More blows expected in the near term, because hitherto the Indian markets have defied what the world markets have been doing. It's probably the first day wherein we are falling in line with the global markets. Do you think there could be more in store?
Well, I think the disconnect was largely on account of the expectations domestically that we will have a slightly more easier time with the monetary policy and with the liquidity. That has pretty much played out now, and I think the kind of dominant move will now be the international markets, which have shown significant weakness, in particular in the US. And I don't see how we can be completely averse to what's going on there.
Pockets of the last few days that have seen weakness and probably divergent to the market move was the entire IT basket, pharma to a certain extent, with the rise of the currency and the implications of the same. Anand, would you be a seller in IT at these levels?
No, definitely not. I think you may find a little more downside on account of the fact that the rupee has strengthened considerably. But that said, if you look at it on a year-on-year basis, you still have sufficient tailwind there. And I'm reasonably certain that the earnings on account of the rupee will be better. But more interestingly, I think the important question is what happens to the demand. And I think the companies have more or less figured out how to handle the kind of slowdown that we saw earlier and the slight pickup in business that we are seeing in the global markets now because of IT. Also, the valuations, though they are a little more aggressive than they were, let's say, 2 months ago or 4 months ago, are not necessarily very much out of line with where the rest of the market is. When the earnings growth in the market for the next 1 year is likely to be dominated only by the corporate-facing banks. Other than that, I don't think there is any great excitement that one is looking forward to. And in that scenario, there is no reason why you should be selling IT. You can be perhaps neutral at this stage.
Would you recommend being a little bit more defensive right now, considering the volatility in the market?
Well, it depends on what you mean by defensive. I think, the market has had a fairly sharp run and taken care of most of the domestic economic positives. The global markets are looking rather weak because of the fact that, there is now almost a consensus that the global economic growth is going to be much slower than expected. And despite that, the dollar, unwind, the balance sheet shrinkage of the Fed continues. And that is going to therefore remain the single biggest dominant factor.
Anand, just allow us to come in. The finance minister is speaking at the Rajya Sabha. We just have to cut across for a minute.
मैं आग्रह करूंगा कि विधवाओं की स्थिति पर मनोज जी अपनी बात आगे रखें। मनोज जी बोले, इस विषय पर कोई मैं आगे बहस की इजाजत नहीं दे रहा, कृपया शांति बनाए रखें। कृपया बैठे, मनोज झा जी इस बहस को आगे बढ़ाएं। सर, इसके अलावा कोई और बात रिकॉर्ड पे नहीं जाएगी, कृपया अपनी बात कहें। हम विधवा महिलाओं के बारे में बात करने जा रहे हैं। मनोज जी आप अपनी बात को आगे बढ़ाएं। आप कृपया आगे कहें। मनोज फॉर रेजिंग दिस इशू। रवि वर्मा जी कुछ कहना चाहते हैं।
I think the finance minister just about finished this point, and then we got to cut across to that. Nevertheless, it's an important issue, and we'll keep on getting you updates from the Rajya Sabha if indeed this conversation comes along. Sorry, Anand, you were talking and you were saying about it depends on what you consider as defensive and what not. But the moot point being, if this is the first day of the fall and if we are going to dance to the tunes of the global markets, I'm guessing we can't take a view on what the global markets would do. Would you be sitting on, would you take some money off the table if you indeed were invested in this whole run up from 10,450 all the way to, well, 10,950 odd?
Well, almost definitely. I think, we've had a fairly sharp run. There's been most stocks have gone up by 10-15%, and the smaller ones have gone up a little more. I think it is definitely a good thing to be taking some money off. It's not like we've broken out of any range on either side right now to get a major trend indication which is changed. Certainly, I think it doesn't make sense to be fully invested at this stage.
Mm-hmm. Okay. What else? So, Anand, just looking at the performance that the broader markets have put in the last few days, we were just starting to see a glimmer of hope and some move up at the broader end of the spectrum. If indeed the larger boys are going to stay soft, if they do, that is. And if they correct further, maybe. Would you reckon that the mid caps, which haven't even risen as much, will tend to fall more, or will they outperform this time?
Well, like I keep saying, I think that's more a function of liquidity. So long as liquidity remains benign, the mid cap can perform. Otherwise, they don't. So for now, I would argue that the liquidity is okay. But if the overall market starts to move down, it's very unlikely that you will have mid cap, small caps kind of standing out and waving, putting their hands up as winners. The market itself is likely to undergo significant change. I mean, we've been running on one single leg of consumption, and now the earnings growth in the industrials and the corporate-facing banks are the two domestic areas where one is looking to take some bets on, where the expectation of earning growth is now much higher. And therefore, it is perhaps time to not just look at the index itself, but basically reallocate the portfolio a little more towards industrials in the hope that the numbers that the analysts are forecasting will actually start to come through, as well as the corporate-facing banks where the probability is reasonably high that there cannot be a new set of NPAs that will come out of the woodworks, and therefore the earnings growth, which were largely pulled down because of the write-offs, will come back to somewhat more normal levels. So those are the two domestic sectors where I think you are going to be betting on and taking some money off the table on both consumer discretionary and non-discretionary.
Anand, for auto as a pocket, we've seen most of them pull back. I mean, if you take a look at Maruti itself, from levels of about 6,500, now moved closer to 8,000, come back down to about 7,500 in the last two trading sessions, but still making its approach on the upside slowly. Would this be a right time to enter into some of the auto names? And within auto then, what would be the favored bet? Would it be passenger vehicles, the four-wheelers, the two-wheelers, the tractor makers?
Well, like I just argued, I think consumer discretionary is not necessarily the most favored place. It has been doing quite well, but I think it is now going to suffer from a bit of headwinds in terms of a bit of demand slowdown, as well as the fact that the availability of credit in terms of loans may not be so easy. If you have to bet on it, then I think perhaps the two-wheeler space is a little more insulated. Especially, I personally prefer, for example, a Bajaj where there is also an export market orientation, not just the domestic market. And otherwise, of course, the tractor business, though it is also not that it is not showing some signs of strength, but it may continue for a little while longer. And, that would be probably the one place that you want to be in, because we are going to see a spate of loan write-offs. And to that extent, that may be a good way to play not just the auto business, but also the farm sector.
Okay. Well, it's looking wobbly. When we started off, or somewhere around noon or lunchtime, oil marketing companies were the only ones that are standing out. A significant cut came about in a lot of other names. We just saw Maruti down about 3.5%. The other auto names too had corrected a bit in trade today. And then at the broader end of the spectrum, some of the NBFCs came off too. The last few days have been good, but today Shriram Transport Finance, Indiabulls Housing Finance from the index did poorly, but Shriram Transport Finance at the broader end of the spectrum down about 5.5%. A couple of banking names too were looking weak, save for Ujjivan and a couple of others. Most of the other names in the NBFC space were looking wobbly today. Anand, there was this hope of due to the higher OMOs and the change of guard at the helm of RBI, that things would be a lot easier, or maybe liquidity would be a lot easier than earlier envisaged. There was some bit of buying that had happened in the NBFCs. Select few of them actually came up above the stress levels that they were, above the levels that they were at before the IIFL crisis too. So all the losses were recovered. What's the sense on this pocket? Because it will continue to remain volatile.
Well, several ways of looking at it. Clearly, the stress that is there in terms of the monetary policy will ease. But the question to really ask is, how do you finance an NBFC if you're an RBI? I mean, if you're a bank, you can say, okay, you can pledge your government bond holdings with us and we can give you a loan. But if you are an NBFC which is helping you to buy some mixers in your house, it's very unlikely that RBI will be able to finance that. So the only way that you will be actually looking to take some easier decisions is to sell your portfolio, and that would automatically mean that you've got converted from being a loan originator. I mean, you've got converted to being just a loan originator and a kind of DSA. Also, that will mean that the valuations that most NBFCs are trading at are factoring in a 30% kind of growth or even more. Now, that may have happened in the last couple of years, but it's very unlikely that it will happen in the next couple of years. So in any way, the price to book ratio has to therefore fall, because you can't have that kind of growth, a significantly lower growth being sustaining the kind of valuations we are at. So I would argue that NBFC as a space is probably not factoring in the worst yet, not even factoring in a normalization of growth, which is what I'm arguing for. If you actually assume that the growth slows down considerably, then I think there is a significant amount of fall that can happen. At this stage, if you have to be in the financials, as I said, it's much better to be in the corporate-facing banks. And personally, I think the insurance space continues to look quite interesting to me. Best to avoid NBFCs. Otherwise, just go back to the favorite private sector banks as well. What's wrong with an HDFC Bank? It is also trading at 3.5 times, much like many of the other NBFCs are. Okay.
Got that. A few stocks that have held ground in the last 2 or 3 trading sessions includes an Ujjivan Financials. The stock was up about 10% in yesterday's trade. Today, at the start of the show, was up 2%. Now has come off, cooled off, and is flat. But 277 on the stock. Hadrien, do you track this one?
Yeah, Ujjivan Financials seriously is showing some kind of resilience. If you compare it with an Indiabulls Housing Finance or any other NBFC, it is very well managed to hold above its 100-day moving average support area. That's around the 270 mark. So that's going to act as an important support. Any decline towards the 270 mark should be a good opportunity where you can once again re-enter Ujjivan. On the upside, we have a very big hurdle going forward, 305. That is the long-term 200-day exponential moving average, which would act as an important resistance. So as far as the 270 mark is intact, I think long position should definitely be held on to in Ujjivan.
Okay. Some other names that are doing okay in today's session in terms of having some gains. City Union Bank is up about 3%. Tata Global Beverages is up 2.6%. Ipca Labs is up. You've got an IRB Intra, which is up 1.8 odd percent. Amongst the bigger losers, you've got Symphony, which is now down 5%. Remember, we were talking about how Symphony as a stock has been trending northwards for quite a few days now at 11.55 or 11.62. Stocks down 4.5%, so some profit taking off the table. Avanti Feeds is down 4 odd percent. You've got Tata Communications, Ramco Cements 4% apiece. NCC also down about 3 odd percent. Symphony, would you be tracking this one, Hadrien?
Yeah, Symphony has had a significant rally in the past 2.5 weeks. But what is happening here is that it has actually hit a hurdle of 200-day moving average. Actually, if you check a lot of these mid-cap, small-cap stocks, they have rallied significantly in the past 1 week, but they are actually hitting their long-term 200-day moving average hurdles, and they are unable to surpass that important resistance. Same thing with Symphony. It is unable to surpass the 1230 mark. That is the long-term 200-day moving average. Once we see that level being taken out, then only we'll see a fresh breakout. Otherwise, till that doesn't happen, we may enter into a consolidation phase, as we are seeing profit booking right now. Stock is almost down 4%, something like that. I think on the downside, anyway, close to 1090, 1080 should be a good level where you can once again consider re-entering the stock. The only reason here is the primary trend in the past 3 months is pretty positive, and I think the trend may continue if we see a breakout above the 1230 levels.
All right, that is Symphony for you at 1161. Moving on then, crude volatility has been the talk of the town for a while now. The commodity witnessed 5% slump in overnight trade on Friday. What does this volatility say about the commodity's performance this quarter? Yash Upadhyay is here with the answer to that on Chart of the Day. Yash, good afternoon.
Afternoon, Devina. So crude oil prices, they are set for their worst quarterly fall in over 4 years, even as OPEC and its allies pledged to cut production. Oil prices, now they declined by more than 5% for a second consecutive time in this week, extending the run of losses for the quarter ended December to almost 40%, which is the most since 2014. In the fourth quarter, we saw a drop of almost 39%. This is according to the Bloomberg data. Now, the crude oil prices they closed below the $55 per barrel mark for the first time since October of last year on the back of rising US inventory. Earlier this week, the American Petroleum Institute, they reported a 3.5 million barrel rise in the US stockpiles. The oil cartel's announcement to slash output by nearly 1.2 million barrels a day starting from January couldn't stem the slide, as traders said these cuts won't be enough to curb the surplus production in the non-OPEC nations, particularly in the United States.
Thanks very much for that. That is the worst quarterly performance for crude oil in 4 years. But that's in fact the silver lining for some of the oil marketing companies, with crude oil trading around 55 to the dollar. Shubham, quick word on HPPP IOC?
Devina, if you look at the data point, strictly going with the data point, this rally that we have seen was more on the short covering front. And if you accumulate the data for a few days, you will see that there are no fresh longs that have got built. So even though we have seen a rally, but the move has not been very, very supportive in terms of the derivative data. Now, one more important data point is that the heaviest call built up for stocks like HPCL is placed at 250, and we saw that today it has retested that level, and now we can see that there is a temporary correction that have already started from that level. So I think this move that has happened now can start exhausting, and my recommendation would be that if anyone has any trade already there, I think it's a good time to go and book profit. Maybe we should not go short, we should wait for more indication, but at least the stocks approaching to the highest call congestion area is at least a sign for going ahead and booking profit. So my recommendation, all the three stocks, will be that if you're long on that, book profit and exit for now.
Okay, got that. Dilip Bharat Prabhudas Leeladhar is joining us on the phone line right now. Dilip, thanks very much for taking out the time. Extremely volatile day of trade today for the markets. We're down almost 200 points on the benchmark index after 7 straight days of gains coming in there. Is this just a minor blip, some amount of profit taking off the table, or do you see a slight bit of a reversal and that this can cause some amount of pressure for the equity markets?
So I think in the last 1 month, we have really outperformed most of the world markets, and probably India has been one of the best performers. And I think not just that, even other emerging markets too performed in a similar way, but India has been the best performing one. So I think it was perfectly playing out the way the oil was going down. But sooner or later, I think we had to catch up with what is happening in the US, and it's very difficult to imagine that we are totally decoupled from those markets and the way US reacts. So despite US reacting very negatively, we had ignored that. And possibly, once again, the indices all over, whether it's Southeast Asia or whether it is Europe, I think everybody is now catching up with what's happening in the US. So I think having said that, yes, this is a correction which possibly will cause a temporary aberration. But all said and done, we think that over the next 6 to 9 months, the volatility will continue as we approach the election date. But overall improvement in the macro fiscal data and the economic parameters will make India a very exciting place to invest, particularly for the foreigners who are looking on a top-down basis. So overall, I would still say that, yes, this correction should be utilized as an opportunity to enter some of the select stocks on a long-term basis.
Dilip, the opportunity to enter these select stocks would be some levels lower, or would you reckon that the extent of this correction won't be too steep?
I don't think the correction of this from the current levels will be too steep. I think more or less maybe another 150 points on Nifty is not impossible to imagine because the way we have gone up. I think that should be considered as somewhat on the lower side. But otherwise, this would be the time to gradually once again buy select stocks and then try to hold on for 15 to 18 months.
Dilip, just one last question before we let you go. So now when we're reallocating and looking at this correction as an opportunity to enter, which pockets or which specific stocks would you be likely to put money into?
So, well, paint industry looks pretty interesting for us. I think both Kansai and Aerolite as well as Asian Paint looks pretty good, both because of the tailwind for the raw material side, as well as we think that even the volume growth should resume, which had really been a little of a question mark in the second quarter. I think apart from that, I think something like the CV cycle looks pretty good. So Ashok Leyland looks pretty interesting in that sector. It's a pure CV play. And of course, in the NBFC space, we like Bajaj Finance. And maybe on the corporate banking front, ICICI Bank and SBI looks pretty interesting.
Okay. Dilip, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us that perspective. That's the view from Dilip Bhatt of Prabhudas Lilladher. It is looking weak. It's not recovered too much. Anand, Tandon, you've been patient with us and thank you so much for that. Before we let you go, I think the weakness in the last few days in the IT space has been quite pronounced. If the market has turned wobbly, would the defensive bent out there would come into play, or do you reckon that there could be some more pressure on some of these big wigs, because all of them have fallen quite strongly and are trading around some key support levels?
Well, that's right. Unless the support levels break, I think there is no reason why you should be selling out at this stage. As I argued, on a longer term basis, they are doing at least reasonably well compared to the rest of the market. And if you look at it, their earnings growth actually have beaten the market over the last 10 years. The index earnings has only grown 5% CAGR. The IT index has done much better and is not trading at a valuation which is steeper. So I don't see any reason why one should be getting out of it. That said, near term, a couple of percentage points more is quite likely. But I think, at that time, it will be providing a buying opportunity, assuming other things remain the same.
Anand, thank you so much for taking the time out and joining us and giving us that perspective. Really appreciate your time. I think Hadrien Mendonca also, we'll just thank him. But before we do that, just one final word, Hadrien. The Nifty Bank, haven't quite chatted about that in detail thus far. 400 points lower, 1.5%. What do you think happens in the ensuing 2 or 3 days?
Yeah, if you do a weekly chart check, we are actually observing a gravestone doji pattern, on the candlestick charts. And I think the gravestone doji is a very early indicator, that we may see a little bit of turnaround on the Bank Nifty as well. Although we need, confirmations before we actually go ahead and short sell the Bank Nifty, not right now. In fact, if you see the daily charts again, it has failed to surpass the 2 days back top that the Bank Nifty had hit. So as long as we don't see that top being broken out, that is around 27,425, 430 levels, I think it's going to be a little difficult for Bank Nifty to make a strong up move. So till we are below those levels, I think we may consolidate, or we may see a little bit more profit booking or selling pressure going forward. So on the downside, there is a gap that Bank Nifty might make an attempt to fill that comes towards the 26,750 levels. So that's where I see the Bank Nifty going forward.
Hadrien, we leave it at that. Thanks very much for joining us. Appreciate you taking out the time. We're going to slip into a very short break. We're still in conversation with Shubham Agarwal. But in the meantime, as we slip into that break, here are some comments from Kenneth Andrade of Old Bridge Capital on what's driving his optimism as we set foot into the new year.
One way to describe 2018 was there was no alpha on the table.
Wrong show to be on.
Actually, very limited beta to look at also. But a lot has transpired in 2018. The expectation levels, we went into the year with very high expectation levels. And at the end of the year, I think there has been a little disappointment as far as the behavior of the market is concerned. Going into 2019, I would like to be a lot more optimistic than what 2018 has left us with, and that effectively stems from I just go back to the quantitative part of the Indian economy, and things are not so bad. Actually, it's an improvisation from 2018 to 2019. actually 2018 was an improvisation of 2017 and again 2019. We got caught with a market that was fairly expensive. And if you can look at 2018 as a consolidation year, I think 2019 has a lot more to offer. So what investors were waiting for all through the last 2 or 3 years was the recovery of earnings. I think that's solidly in place as far as the second quarter of the financial year is concerned. We just might go into a minor hiccup period in the third quarter. But if all settles down and we put the big event behind us, which is the elections, I think things should materialize quite differently for the remainder part of the year.
EV Expo, biggest expo on electric vehicles and components, 21st to 23rd December 2018, Hall number 7, Pragati Maidan, Delhi. Be a part of pollution-free nation.
What will be my contribution to the world? I wonder. Will the things I created
pass the test of time?
Or maybe they'll lay the foundation for something new. I hope my ideas survive.
I've had some great ones.
And there's still
so much left to do.
Who knows what life will bring.
The road is long.
The journey full of promise.
The pursuit
only just beginning. A series of exceptional stories about exceptional people whom time won't forget. Pursuits by Skoda. Coming soon on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with countdown right here on Bloomberg Quint, and pull up what the markets are doing at the current point of time. 200 points lower in the session, so it's not looking all that great for our markets. About 665 points down for the Sensex and the Nifty Bank to 422. So any kind of even a minor pullback is getting sold into. It's not, I mean, not that there was a pullback in the first place, but there is pressure on the markets currently. Not looking all that great. Pull up the individual movers in the session. I just want to get the, if you can get the MRR for the Nifty and just the one-day MRR and just show you what stocks have corrected and what shows stocks have gained. Hardly any gainers, or the heat map on the screen, either of the two, and you will see the number of losers far out with the number of gainers. 4 stocks in the green, and that's about it. And one of them is HPCL, of course, by the way, because of the crude price fall. But look at the losers: UPL, Indiabulls Housing Finance, Adani Ports, Maruti Suzuki. The real big heavyweights make their presence felt only later, the likes of Infosys, etc. We don't have the HDFC Twins or Reliance Industries in the top 10 losers either. So it's a broad-based sell-off that we're seeing in the session today, and it's not looking good at all right now. Even for the mid caps and the small caps, it's not looking all that great. The mid caps and the small caps too have looked wobbly. Okay, let's try and find out what's made it to Yash Upadhyay's list of the Fab 4 stocks of the day. He joins us right now. Must have been a difficult task, Yash. 200 points now down for the Nifty. What's made it to your list?
Barely scraping through, Neeraj. I'll start with Indian Hume Pipes. They at one point, shares of Indian Hume Pipes had surged more than 5% after receiving a big order of close to 500 crore rupees from Andhra Pradesh government, so that one's still holding on to gains of 3%. Bata in a market like this is still 2% higher. The stock is every day hitting a fresh 52-week high, so watch out for that as well. NDTV is locked in an upper circuit of 10% after the company announced that it would announce a deal with Taboola of worth close to 500 crore rupees. And the last stock I want to highlight is actually Navkar Corp. Now, this one has been gaining for the last 3 trading sessions. It's up close to 7% today as well. And with that, it has surged more than 50% in just the last 3 trading sessions. So watch out for Navkar Corp. Back to you.
Okay. So that's, well, a few stocks which are trading in the green despite the fact that the index is 200 points down. 700 for the Sensex, 200 points down for the Nifty. Shubham, any option strategies that you could deploy at the current point of time?
I think if you look at the metal space has been, indicating that there should be some further decline from here, and especially SAIL and Tata Steel are the 2 names where I think a reversal is due, and we might see some follow-up selling coming in on Monday. So if we have to participate via options, I think SAIL is a stock where we can look for some participation by buying the in-the-money put option of Strike 55, which is now quoting at 2.5, 2.6. And I think on Monday or on Tuesday maximum, if we give it 2-3 days, then there's a good possibility that we might see SAIL slipping down to the level of 50 rupees. So with that view, I think the 55 put option, which is trading at 2.6, can be bought with a stop loss of 1.5, and on the higher side we expect a target of 5 rupees. So for now, I think metal is the space where one can look to build some short positions, but via options.
Okay. Well, let's get in one more fundamental voice, G. Chokkalingam of Economics Research. Mr. Chokkalingam, thanks for joining in. Are you putting in some money to work, or are you waiting for some more corrections?
No, we have largely already deployed in the last 2 months. And in fact, we are taking fresh money to deploy. I don't think this kind of crash would continue in the short term because till May, there are no short-term macro event which will worry on the domestic front. And secondly, fall of 37% in the oil price from its peak price, I consider that as one of the biggest relief for Indian economy and markets. So actually, I'm surprised that we have fallen very badly after a long time in line with the global markets. But next week, I believe probably we should outperform the global markets, which means we should recover the losses quite significantly.
Okay. Mr. Chokkalingam, the set of names which have cracked today include, amongst others, large cap auto names to the likes of Maruti, etc. It's a stock that a lot of retail guys want to buy, don't quite know it's a good level to buy or no, and believe that a 15% fall in Maruti Suzuki warrants a purchase. Would you buy the stock right now, or would you wait for the next 2 months of sales numbers to come out before you take a call?
Yeah, I would wait for another 2 months at least, as you said, to see whether the company is able to grow, because it has revised the downward projection for current year to 8%. But if you recall, the first half it has done relatively better, which means second half the growth is going to be much lower than the 8%. And also, tactically maintaining this 50% leadership in the market is not going to be an easy job with primarily focused on single product, which is passenger cars. Now, I would prefer something like a Mahindra and Mahindra because of diversification across geographies and across the product segments. That gives me more comfort than Maruti. I believe personally that it's going to be a little tough for Maruti, to come back to double-digit growth or to maintain above 50% market share in the short to medium term.
Yeah. This looks slightly bad as of now. Shubham, Maruti on the charts.
I think Maruti is placed for a big correction from here, and in fact, this is one of the stock that we have also recommended to our clients as a disclaimer, and we feel that the correction should accelerate from here, and at least in a short term we expect the stock to collapse to at least 7,200. So I think the overall placement for Maruti, if you notice, there is a channel that has got developed where the resistance was coinciding with the level of 7,900 to 8,000, and exactly from there we have seen that a reversal has now taken place. So I think the view for Maruti with a short-term perspective remains for a target of 7,200. But I think even if you look at more positional perspective, I think it might even slide down to the level of 6,800 or 6,700. So overall, Maruti short-term, medium-term, we do see a reversal happening from here. In fact, a short trade can also be taken for traders where they can maintain a stop loss at 76.50, and on the downside 7,200 could be the first target. And I agree with the last speaker where Mahindra & Mahindra looks pretty positive. May not be the correct time to go and buy immediately, but it's a good portfolio addition at least, and if at all a correction happens there to the level of 740, 750 after this correction that we are seeing on Nifty, I think it will be a good bet to go and invest in Mahindra & Mahindra. So for Maruti, the view remains negative. A short trade can be initiated. Mahindra & Mahindra in a pullback, I think it's a good opportunity to buy in portfolio.
Okay, some stocks which are correcting on volumes which are fairly high compared to the last few days. I'm seeing a Stride Sashun come off, volumes higher than normal. There is fall in a JK Tyre, volumes higher than normal. There is a fall in Larsen & Toubro Infotech. Out here too, the volumes are higher than what the normal volumes are. The AVAT will show you that the stocks have fallen, but all of these stocks have much higher volumes than what they've done on a 10-day or a 20-day average basis as well. Mr. Chokkalingam, coming on the tire companies, the last couple of days, rubber prices coming off, or the last couple of months, rubber prices coming off, crude prices coming off, all of that should augur well. Priced in already, or would you be comfortable going into and buying into tire companies? Again, the dichotomy remains that if auto sales are slowing down, what happens there? But the aftermarket sales might still be strong. So what do you do with the tire names?
Yeah, interesting question, comprehensive. I'm happy to answer. I believe the tire stocks will do very well in the first half of 2019. I think tire stocks would gain anywhere from 10 to 20% in the next year minimum. As you rightly said, the oil price is down 37%. Even the global market, the natural rubber prices have corrected, but in the domestic market, slightly firmed up. But since oil prices come down 37%, and eventually the synthetic rubber also would come down quite badly. So therefore, natural rubber price also will come down. On the question of auto sales, you are absolutely right. That's a concern. But there are companies like MRF which draw 3/4 of the total sales from the replacement market. So the dependence on the OEM is only 1/4 of the total sales. So therefore, a company like MRF can withstand this stress in the automobile sector. And also, as we know, the import of tire also has come down, and even the rupee depreciation has made some wonder on the import front. And also, there are talk of cutting the GST on tire. If that happens, that will be a big trigger. So I continue to remain a buyer of MRF, and personally also we have invested in MRF.
Interesting. Okay, stay on, both of you. Lots more to talk about, but it's time to take a look at what dealing rooms are recommending in the session today. As we speak, we are trading at the lowest point of the day, by the way. Keep that in mind. Yatin Mota is here with his channel checks. Yatin, what are you learning?
Neeraj, of course, we'll talk about a couple of stocks, but clearly after the 7-8 days of positive momentum, finally we are down almost 200 points on Nifty futures, and probably there is some sense of profit taking and panic in the dealing rooms, especially since we are at Friday. So probably the pain could be there on Monday when the pain payouts happen. That is what the dealing room sense is. CG Power, and that stock is at the day's high despite the fact that we are at the lowest point of the day in terms of markets. Dealers do indicate that domestic funds are buyers in trade. There were a couple of block deals also in the counter. post which we saw some momentum happening, almost 8% up for that one on good volumes of almost 2.2 crore shares. Next up is Balrampur Chini, and for sugar stocks in general, from the peak level, we are looking at some profit taking which is happening, and dealers do expect the profit taking to continue in select sugar stocks, including that of Balrampur Chini. 5% down for that one on good volumes. We'll have to see whether or not these are good delivery volumes in order to really look at the sugar pack. And finally, Zensar Technologies, one stock wherein brokerages have been bullish on. In fact, this week we had two initiating coverage coming in on Zensar. One is JM Financial and the other one is Investec. So a couple of domestic brokerages have been upbeat on the business for Zensar. Let's see how really does it shape up in the coming few months.
Okay, interesting. Thanks a lot for that. At a time when most tech companies are not looking all that's great, brokerages are bullish on Zensar Tech. That's an interesting point to monitor. Okay, 15:20 or rather 3:20. Time now to get in some closing strategies. Shubham, if you had to bet on one stock as a trade, BTST or STBT as the case may be, what would that be?
I think I'll go with a tire company, and in fact Balkrishna Industries, where the overall stock has been underperforming for quite some time. That saw a pullback with the market moving up, but now I feel that the pullback has come to an end and we might see the downtrend resuming again. So it's closing with a minor breakdown. I think for Monday, this breakdown should accelerate even further. So I think Balkrishna Industries is the stock where one can initiate a STBT with a stop loss at 950, and with a STBT perspective, I think 900 will be the first target for Monday. But if we hold it for 2-3 days more, I think the ultimate target for that would be around the area of 860 to 865. So I would recommend a short on Balkrishna Industries for a BTST and positional, both of the perspectives.
Okay, a sell call on some of these names. Shubham, just wondering, the OMCs have still stood okay. If you had a long position in an HPCL, would you carry home the long position?
In fact, to be honest, I'm very, very keen on taking a short trade here, and I'll justify with some of the data points here. If you look at oil marketing companies, even last series, if you notice, 250 was a big resistance for HPCL, and even 150 was a significant call writing area for IOC, and we saw that from the exact same level we did see a correction of 15% in the last series, and even now if you notice 250 is the highest call area for HPCL, and the price is quoting exactly at that point. So I think there might be a 3-4 rupees more upside, which I would not want to play. And the last correction on the news which started was approximately around this area, and I think a lot of supply will start emerging. So I think if anyone has long trades here, the market is giving a fantastic opportunity to book your profit. We have the Nifty down 200 points, but these stocks are doing well. I think another 2-3% maximum is the upside left from here, and post that, in fact, I would be very, very keen on taking a negative trade on this via an option strategy, which we might discuss next time. But for now, I think one should definitely look to book profit in oil marketing companies.
Okay, book profit in the oil marketing companies. You concur there, Mr. Chokkalingam? The market mood notwithstanding the fact that crude is not able to scale up, and the OPEC meet is behind us. The US stockpiles seem like they're going to go up. We're currently at 50.42. Seems like the days of 70-75 are behind us for the time being. Very difficult to predict crude, of course. But what would you do fundamentally with BPHP IOC?
So we are holding HPCL. Maybe the traders are having a profit, but I doubt how many, what percent of investors would have profit in OMCs like HPCL. Now, very interesting analogy. Last year when Brent oil price was around $55, HPCL was trading at 450 rupees. Today the oil is back to $56-55, but HPCL is trading at 240. I think it's a big anomaly. It's partly because loss of faith in the PSU companies by the investors. Perception also has become negative, but that doesn't mean that the prospects are gone for HPCL. I remain quite optimistic. I don't think the oil price can go back beyond $65 in the short to medium term. which would be positive. So therefore, for investors, I would suggest hold. And next week, if at all there is a $1 or $2 jump in the oil price, then the HPCL, the oil marketing companies may fall, and that is a time to buy OMCs.
Well, time to buy OMCs, interesting. If we can also just show the list of stocks which are falling the most this hour. And the data will come up on your screen in just moments from now. Stocks which have fallen the most this hour or gained the most this hour. I don't think the stocks which have gained the most this hour can come in, but off the highs of the day, and a significant number of mid-cap stocks would be out there. By the way, as we speak, the Nifty as well at 10,747 is down about 204 points. Sensex at 35,729 is down about 700 points. The Nifty Bank hasn't fallen as much, but there is pressure on that index as well. But corrections galore across the board. The banking names, Shubham, one banking stock that you would trade.
In the banking side, I think SBI, now it would be a kind of a contra trade, but I feel that, you know, SBI, the breakout that we saw 2-3 days back, still holds good and looks very, very positive. And the level of 290 is a very important support for SBI, and I think that shouldn't get breached, at least in the near term. So if we have to go and take a trade on the banking space, I would bet on SBI for the reversal from here, and the trade would be to go long at the current point. The first target will be 305, and with a more a medium-term perspective, it can even retest the level of 310 to 312, and I think this trade can be taken with a stop loss of 285, which will be now a safe level, below which I don't think that the stock will slip. So after a long time, there is an important study that we have seen there, which is called as volatility contraction, which indicates that if the volatility of any of the stock is significantly going down, despite, you know, a temporary correction happening there, and that is the case with SBI, generally those kind of stocks witnesses a good move in a short to near term. So I think SBI will be the stock, 285 is the stop loss, 305 will be the first target. One should look to go long on SBI.
Okay, just one final point that we should quickly bring out, as I was saying, stocks which have corrected quite significantly from the highs of the day at the broader end of the spectrum, and let's just show them. This is what's happening. Ahluwalia down about 8%, BEL about 7%, Godfrey Phillips is down about 7% from the day's highs, Tata Communication, Neel Kamal, these are stocks which are looking or have corrected quite significantly from the levels that they were trading at. Shubham, just very quickly, a BEL which has come off quite significantly today.
I think the correction is indicating that, you know, the rally that we have seen has just come to an end. So I wouldn't give a short call here, because the move was very, very positive, with some of the data points also showing some positive reversal kind of a sign. So I think the pullback that we are now seeing in the stock can extend to the level of 85, which is another 3 rupees down from the current level. So the recommendation would be, if anyone is holding the trade on the long side, they can look to exit and re-enter at the level of 85, which might come in a day or two. But the overall structure here remains positive, and I think the stop loss or the important level for the stock will be 82. So whenever it comes down to 85, I think that will be a good opportunity to accumulate that again. The stop loss will then be 82, and with a trading perspective, I think for the Jan series first half, we might see a rebound happening to the level of 94 to 95. So for now, one can look to book profit and re-enter at the level of 85.
Mr. Chokkalingam, quick thoughts here, BEL. 30 seconds, we just have to wrap up the markets, then we'll do a detailed chat.
Investors who want to hold for 2-3 years can hold, but in the short term, it is unlikely to reward.
Okay, that's as short can be, but watch out for BEL, down about 2.5% in the session today, and not looking like it'll recover in a bit of a hurry. Let's start wrapping up the markets for our viewers, and as we speak, well, down about 200 points as we close. The Sensex about 660 odd points, so it's not looking all that great, even for the broader end of the spectrum, as they'll come up on your screen. This is, of course, the benchmark indices. Now the big cap and the small caps will come up on your screen, and a steep correction midway through trade. We started off marginally in the green, remember that. So
quite a strong correction at the broader end of the spectrum too. Let's talk about the large caps first, and then I'll take you through what's happening at the mid cap or the small cap end of the market. The large caps, HPBP, looking okay. IOC, remember, goes ex-dividend, which is where there's been a correction, but otherwise it would have been in the green too. But that's about it. Nothing else really worth its while in the green. But look at the losses. IOC, ignore that. Ex-dividend, as I said. UPL 4.5%, Adani Ports 3.5%, Maruti about 3%, Z about 3%, Wipro, Infosys, Titan, Bharti, Reliance. Some heavyweights, key heavyweights, which are trading with a fair degree of red. Bajaj Auto and Eicher have looked slightly wobbly. Asian Paints has looked wobbly. TCS has looked wobbly. So the number of stocks in the red are high. And it's a broad-based sell-off, as I said. It's not just restricted to a few key heavyweights in the session today. Let me go across and tell you something about the mid-caps and the small caps as well. Maybe the MRR function can come up on your screen for today's session. And we'll show you what's happening at the broader end of the spectrum, because there's a fair degree of weakness at the mid-cap and the small-cap end of the market as well. This is what's happening for the Nifty. Now let's just change the index to the mid-cap index or the Nifty 500, either of them. This is the Nifty 500 index. This is the 5-day period. We can get today's chart, the one-day return, and you will see what I'm talking about. There is a fair bit of weakness even at the broader end of the spectrum. Surely there will be winners, but if you can just change this to 1 day, and you will see what I'm talking about. There's a fair degree of weakness across the board. So Godfrey Phillips down about 6%, Shriram Transport Finance about 5.5%, and a select set of NBFCs have looked very wobbly today. You will see a fair degree of financial presence out here. Oberoi Realty down about 5%. The Symphony has been gaining quite tremendously the last few days, 23-24% in the last 4 days, down about 5% in the session today. Vardhman Textiles, SRF, Tata Power Limited has corrected about 5% too. Kalpataru Power Transmission about 5% lower. As I said, Shriram Transport Finance down about 5%. Not all is lost though. There are some gainers, a couple of names. CG Power and Industrial Solutions, 8.5%. Shipping Corporation of India, about 7.5%. Navkar Corporation, about 6.5%. Some strength for City Union Bank and Central Bank. I must say, some select PSU banks have stayed rock steady throughout the trading day today, and Central Bank probably falls in that category. So this is how the markets have shut shop today. Now, before we go on to the trading highlights for the day today, just a couple of mentions of what's happened for the week as well. The Nifty and the Nifty 500 again, and let's see the 5-day performance and show you what's happened and what's moved around in trade. I think OMCs will dominate the list on the gaining side. Yes, HPCL about 10%, BPCL about 8.5%. No surprise there. Tata Motors has looked slightly strong this week, about 5.5% higher. Bajaj Finance 4.5% higher. Again, the big boys come back and taken center stage, so good going there. Indiabulls Housing Finance about 3% higher. Bharti Infratel about 3%. Actually, it fell today. Otherwise, the gains would have been more pronounced. What about the losers? So Infosys, and symptomatic of what's happened in the IT pocket, down about 8.5%. Z Entertainment about 8.5%. TCS again, as I said, the IT, Wipro, TCS, Infosys, Tech Mahindra, almost everything has cracked in trade. Pull up today's session, the turnover. We should get what the contributors in today's session are, but actually the turnover would be important, and that's the point. Look at the total turnover, and it's really bounced back in the last 45 minutes of trade. So heightened activity, close to 10 lakh crores, and it's not a weekly options expiry day. The cash market volumes too at 35,000 crores are fairly high on the NSE side. So fair bit of selling. Let's see if FIs have indeed gone out and sold in the session today. We'll get to know it once the day comes to a close in about a couple of hours from now. Final thoughts from our experts. Shubham, what does this cut mean for the expiry? Because that one support of 10,800 has been taken out, and taken out quite convincingly. What happens over the next 2 days?
Yeah, I think after the correction that we have seen on the Nifty today, if you look at the market breadth also, about 170 stocks out of the 200 stocks has seen fresh shorts, which is a data point which is actually quite worrying. And a single day correction of this intensity generally means that, you know, in the near term, even if it do see a pullback coming in, I think most of the participants will try to go and take an exit from there, and most of the pullbacks will get sold into. And the third important data point is that, as you correctly said, 10,800, the entire market was watching at that level because the put OI was quite significant. But if you look at today's open interest built up, there is a significant amount of unwinding that we have seen in 10,900 put and 10,800 put, and now the supports have shifted to 10,500. And even on the call side, there is a significant amount of writing that has happened at the money and higher strikes from here. So I think all these data points are indicating that, in the near term, even if a pullback happens, it will be difficult for the market to sustain. So I think pullback should be sold into. If at all we do see Nifty coming up to the level of 10,850 or 10,900, I think that will be a good point to go and build some of the fresh shorts with a stop loss at 10,950. And in the near term, I think we might see the Nifty coming down to the level of 10,600 at least. But if we look at the expiry data perspective, the option pain and the option gain, now these are the two important studies which generally indicates that, what is the point where the equilibrium stands and where we might see an expiry happening. That stands at 10,750, which is exactly where we have seen a close today. So I think for an expiry perspective, 10,750, but from more of a medium term perspective, I think pullback will get sold into for a target of 10,600.
Okay, Mr. Chokkalingam, for the benefit of people who tune in right now and want to get a sense, you believe that there's a possibility that the correction could be steeper and we could fall some more if the world markets continue to get roiled?
I may be wrong. On the contrary, I have a very, very firm belief that our market would outperform. In fact, already outperformed year to date, meaning global markets. That confidence comes from the fact that the oil price has fallen 37%. I mean, many people are worried that oil is going to go close to $100, but that has not happened. So this 37% fall, which is likely to save $30 billion per annum roughly, is going to do a lot of wonders for the Indian economy and markets. And second, till general election results are out, there are no domestic known risk factors. So therefore, I believe till the alliances are formed for general election, there are no major risks, and we would outperform in the next 6 months the global market. One has to only worry on the outcome of the general election. Only if the election results lead to any instability, in the sense the ruling party depends on 15-20 political parties to run the government, then we will have a bearish pace for another 2 years. Otherwise, I remain very confident.
Okay, let's see if the markets remain that confident next week too. Chairman Shubham as well as Mr. Chokkalingam, thank you so much for taking the time out and being with us today and giving us those perspectives. And on a somber note for the week, we wrap it up on this leg of Countdown. Thanks so much for watching. But a detailed market wrap with Agam Vakil is coming up next. You may want to tune in for that. Thanks for watching Bloomberg Quint Live.